Hello guys, welcome to the Nailing FX session today. We've called it swing shots, so hopefully you guys know what's coming in terms of the style of trading that we're going to cover today. My name is Becky. I know it's on its side there, but you've got my email address over on the side here. It's becky@tradictive.com. So if you have questions for me, you can go to, or you can email me, becky@tradictive.com, or you can go to tradewithufos.com/Becky. Now this page, I'll just open it up for you guys. This page is simple but useful in many ways. So you can sign up for a free Trade with UFOs membership here through this link. You can book one-on-one coaching with me if you want to. And then there's also this question section at the bottom. So if you use this link and you put a question in the bottom, then I get a notification for it. And you'll see down here that there are questions and answers that we can obviously respond to, and other people can see it. That's why this is great, rather than sending me an email. Because if you have a question, probably other people have a question. So if you put it here, then I can answer it and other people can see that answer. So it's helpful for everybody. Now, in order to ask a question and be able to see this as it is here, where you can put in the title of the question and ask one, you do need to have a membership. So that's one of the benefits of having a membership, as well as we'll send discounts out occasionally, and you'll get recordings of YouTube sessions we do and stuff like that as well. So you can just fill in your full name and email address, click I'm not a robot, and then follow the next steps, set up your free membership account, and then you can come and ask a question if you need to. So in terms of what we're going to do today, as we said, it was going to be swing trading. So hopefully you guys are okay with that. Of course, you can do many things with Forex. That's the beauty of it being such a huge market with so many orders that move through it across any time of day. Of course, we're doing the US Open right now, but to be honest, for me, it doesn't really matter what time of day I trade Forex, especially as a swing trader. It will depend what currency pairs you're trading as to whether or not time of day really does make a difference. So again, for those that are watching this recorded, potentially just as valid for those that are watching it live. So just to say as well, hopefully you guys can ask me questions. If you have questions as you go, just let me know. I'll answer it as we go. At the end, you can ask me questions as well, but normally better if it's in the moment and you're thinking that doesn't make sense, or I wanted to go over something else, again, just put it in the chat box and I will answer your questions. So just check in, everything's okay in terms of audio. Everyone can hear me okay? Before we move on. All good, brilliant. Okay, so first thing we want to do, always before we trade, is check the economic calendar. That's something that I look at all the time. It's not something I use to help me make a decision. I'm not going to place a trade going long or short based on what the news is likely to be. But I just want to know, is there going to be a lot of volatility in particular currency pairs? And therefore, do I want to avoid those things? That's the way I use it. And again, you can use it in different ways. Depends on your trade plan, how conservative or not conservative you are. But for me, this is what I use it for, as kind of a volatility thing. So all I've done is I've filtered by today. Our trades are going to be today. You could filter by, for example, just this week. So you see the list of what's happening this week. I will always look for high impact. The reason I look for high impact is because normally the lower impact stuff is kind of factored into the price anyway. All of this here is in Eastern time. So it's 5 hours behind me. You'll see it there, GMT -5. So all of these times here are Eastern time, so New York time. So obviously today being Tuesday, we have some high impact news that would have already come out on the euro, and then we've got some high impact news coming out on the New Zealand dollar later on today. So again, not necessarily to say that I would trade those things or wouldn't trade those things, but just to be aware of them. Perhaps you might put on less risk. If you know there's high volatility coming, you might put targets closer together or closer to your entry so you're in and out quicker, or you might avoid it entirely. So that's one way you might use that. Good to see that people can hear me. Good. Okay, so the next thing that I do, again, is all about, for me, trying to make this as easy as possible. I don't want to confuse myself. I don't want to trip over myself. I don't want to spend ages analyzing something to then realize there aren't any good opportunities. So I normally use this scanner that we have here on TradeStation just to highlight for me easily and quickly where are my decent opportunities. That's not to say I'm going to take trades on those things. It might be that I look at it and upon closer inspection, it's not actually the best opportunity to take, but at least it's weeded out the ones that are definitely not a good opportunity to take. So you'll see on this scanner, we have these words here that are highlighted. So near sensible short. We'll also have near sensible long. We'll have hopefuls, and we'll have sensible shorts or hopeful shorts. What we're looking for are the ones that are highlighted to us in yellow, because those are showing us where we have opportunities that are likely to trigger soon because they're near. And we also want to go for the words that say sensible. And obviously that makes sense to be sensible rather than hopeful when we trade. But again, just because it's the same color, just double check that you are looking at a sensible one rather than a hopeful one. Now, what we want to look at as well is if we have a near sensible or a near hopeful, it's just to double check that we have a confirmed climate as well. So out of interest, how many of you have seen anything that we do within Trade with UFOs so far? Do you already know how climate works and what we're looking at here? If so, let me know. If not, let me know. I can kind of expand on it a little bit there and explain a little bit. I'm happy to the kind of strategy that we use. So as I just wait for you guys to answer on that, I'll just explain what my next step would be. So for me, it's always looking at the scanner to just help me out with these easier decisions. It's a lot of the 140 minutes to start with. And one here is Euro US dollar. So it means I know I'm just going to go and look at the Euro US dollar. I'm not going to filter through loads of other ones before I realize that that might be a good option based on market profile. So if you mean by market profile, it depends what you mean by that. So all that we do is based on technology, analyzing market data to then come back and tell us where we have high probability opportunities. Again, not to say that there are opportunities that we're definitely going to take, but there are opportunities that have higher probability based on statistics, based on data. For me, one of the reasons I like that is because the markets do not care about our subjectivity. They don't care about what we think, what our opinions are, what our political leanings are, what news station we watch. All of those things are subjective. What the market cares about is orders, buying and selling. That's the only thing that can move price up or down, buy orders and sell orders. So what we want to understand using technology and data that tells us where those orders are is where are the higher probability places to enter, and should we be going long or short based on the technology, based on the data, based on the statistics as to where those orders are. So if I just go now to a trading view chart, so I use the scanner on TradeStation, but we'll go to trading view to do the analysis. You'll notice here I've got my screen split in two. So on the left, I have this app here at the bottom, just called Auto Climate. I've also got my EMA there. I'll come to these in a second. And on the right, it actually looks like I have a blank chart there on the right. I'm just going to squidge it, make sure that my UFOs are on. Perhaps I need to load more data. Oh, there you go. On the right-hand side, I have what we call UFOs. So there's these little bands with what look like little flying saucers. That's why we call them UFOs, or one of the reasons why we call them UFOs. These serve specific purposes and come with a specific process that's, again, quite methodical based on using data. We do one first and then the other, and I'll explain why we do that. So the first thing we want to check always, which whenever we trade, whatever you trade, this should always be the first thing we ask. Question number one, should I be long, short, or do nothing? Particular emphasis on the do nothing. I know we are sort of programmed to believe in the way that we work and the way that the world works, that the more hours we put in, the more money we make. The more we do, the more money we make. That is not necessarily true in trading. If you are spending time and placing a lot of trades that are not statistically in your favor, that don't have probabilities with them, you're likely to be placing a lot of trades that actually make you lose money. We don't want to do that. We want to make sure that if we're trading, we are doing it because we have probabilities on our side. And if we're going to trade, we need to know, should I be buying or selling? So that's the first thing that we always ask. This is what we use over here on the left-hand side. This is what we use our Auto Climate app for. So the Auto Climate app analyzes market data for us and comes back to tell us, based on loads of different bits of data that it's looking at, it's using moving averages, it's using structure of price, to tell us where the probabilities lie, to the upside or to the downside, or nowhere at all. So it can show us, we can see here we've got these different dots with different lines coming out of them. It can show us a thick blue dot, for example, any one of these, thick blue dot, that would tell us we have probability to the upside, meaning we should be looking for long opportunities. We could have a thick red dot, for example, any one of these, or the one that we have currently right now. That tells us that we have probability to the downside. We should be looking to go short. We then have, they're harder to see, and that's kind of a reason for it. Let's use a different color here. Thin dots. So we've got those thin blue dots there, thin red dots there. Those thin dots of either color, doesn't matter the color, because they're thin, that's the Alter Climate app's way of telling us that we have less probability, less statistical advantage, and therefore it answers the question for us as to do nothing. So in terms of the market data, in this example we have here on the euro, we have a thick red dot that tells us probability to the downside, that we have more statistical advantage if we look to go short. Now, another thing that we might use Alter Climate for is to understand if we are going to go short, if the trend, if the climate is down, how long can we expect it to go down for? Again, based on statistics, based on what normally happens. Because we all know, we've all heard that thing if we've been in the trading world, you know, the trend is your friend, and then we have the trend is your friend until the bend at the end. Trends don't last forever. They can't. It's kind of impossible. Obviously, everything goes up and down. It's physics. So we need to understand, just because we have probability to the downside now, just because the market is moving down now, doesn't mean it's going to do that forever. So we don't want to be late to the party. We want to be early to the party. And that's where these three numbers come in really handy. And what's great about these is that they tell us, statistically speaking, how long does that market usually go up for in terms of number of candles. So we're on a 4-hour chart here for our Alter Climate, meaning it says 6.63. Let's just round that up to 7. I'm just going to put that there. 7. Meaning, oh, I've done that wrong. There you go, 7. Meaning that this market usually goes up for 7 candles on a 4-hour chart. We've got 4-hour chart up here. So it goes up for, I guess, just over 24 hours. It would go down usually for 6. Again, I'm rounding that up. That's 5.8, but I'm going to round it up because we obviously don't have percentages or fractions of candles. I'm just rounding those numbers up. So we usually go up for 7 candles, usually go down for 6 candles. And we are currently on the first candle down, meaning we have statistical probabilities, or we likely candles. Now, again, just because something is cool or probable doesn't mean that it's definite. We still need to manage our risk. It doesn't mean necessarily just going to jump. At least we know that we're starting to have odds stacked in our favor. We have probability to the downside with the climate itself, and we have probability that it continues to the downside. So again, 2 things in our favor so far before we've even looked at where we're going to enter. So does this make sense so far, guys? Are you with me in terms of how we're using Alter Climate there to help us answer that first question? Yep, good. Let me know if you do have any questions, or if you want me to expand on anything. So just because we have decided that we're going to go short does not mean we just sell right now. I always say, what is the likelihood that the best time of day to sell something or buy something is the time of day you happen to be sat down free at your computer to press buy and sell right now? We very rarely or hardly ever will take a market order, either going long or going short right now, whatever the price is right now. It's the same with long-term investing as well. You know, a lot of people might get inheritance or a bonus, or a certain amount of money comes their way, and they go and invest in stocks right now. They go and buy them right now, which is to assume that the day you got your inheritance or the day you got your bonus is the best time of year to buy something. So we need to be more specific about where we buy and where we sell, so that we can keep our risk low, probability high, and reward as high as possible as well. So question number 2 should always be, if I buy, where? And if I sell, where? Where am I going to do this? I'm not just going to go long or go short at market right now. I need to have, again, an objective place that's based on data, that has probabilities on my side as to where I'm going to be getting in, buying and selling. So that's what we use Alter UFOs for. So that's what we have here on the right-hand side, Alter UFOs. Now, Alter UFOs on this platform, we have them on TradeStation as well. So on this platform, it's laid out slightly differently. You'll notice that we have these red bands and we have these green bands. The green UFOs refer to good places to buy. The sell UFOs refer to good places to sell. Now, UFO itself stands for unfilled order. Basically, what it's showing us is where we have big stacks of sell orders that are waiting to come to the market and push price down, and where we have unfilled buy orders that are waiting to push price up. And again, it just highlights it to us visually on the chart by analyzing the data and the structure of price for us and showing us where those orders are likely to be, and therefore where we would have higher probability to get in and out. So again, hopefully that makes sense with UFOs. So in this case, if we're going to go short, because we have permission to go short, the Auto Climate app is telling us it's a good idea to go short. If we're going to do that, where are we going to do it? Now, we have these red UFOs. You'll notice as well we have different colors. Don't worry about the different colors for now, but we've got these different UFOs that are red. Those are all above price. Now, the confusion could be, if we don't layer in something extra, which I'll show you in a second, the confusion could be, well, there are three, just on this clip of chart that we're looking at here, there are three red UFOs. We have this one, and this one. Which one do I pick? Which one has the better probability? Which one's the one that's gonna work for me? Should I take any of them? Just because they're there and they have some probabilities with them doesn't necessarily mean that we should take all of them. Again, like with every strategy or anything in the world, I think there are many ways to skin a cat. I know that's a horrible phrase, but many different ways that you can do the same thing. It's not to say that somebody that did say, right, I'm just going to take all of those UFOs would do badly. They would just have most probably less probability, less of their trades would be correct or be profitable than those that layer in extra things to give them higher probability. Neither one is right or wrong. It's up to your personality, your trading profile, the way you think about things. It's entirely subjective. But whatever you do, I always say this to everybody, whatever strategy you use, it doesn't matter if you use these apps or not, if you use this strategy or not, be consistent, have a plan, know exactly what you're doing and when you're going to do it, and your plan should be foolproof. There shouldn't be a situation where you're looking at the markets and you're confused or you don't know what to do, because your plan should tell you exactly what you do. You then need to do that exactly. If you're going to sometimes place all of the UFOs and sometimes just place one of them, it's hard to really see which one's working for you. It's hard to really see what's going well, what's going badly, because your plan is essentially changing. So again, for some of us, we might just want to take the closest UFO or all of them and just see what happens. For others of us, we might want to be a bit more specific here and layer in an extra level. So the extra level that we layer in is going to be our EMA value. That's why we have the EMA there on the left-hand side. Now, the one on the left-hand side, that's on the 4-hour chart. That's where we have our auto climate. So it's using bigger time frames than the time frame that we use to enter. The time frame that we use to enter is a 21-minute chart. That might seem like a bit of a random number. There is a reason for that. I might, if I have time a bit later, I might explain that, or I might explain it on a different session. But just trust me on this, that we use these timeframes for a reason. So the 4-hour chart on the left-hand side helps us know whether we're long or short or do nothing. And the 21-minute chart on the right-hand side is where we use our UFOs to help us enter. So why am I coming back to the EMA on the left-hand side? Well, because usually the bigger the time frame, the greater the power. The bigger the time frame, the more orders there are. The bigger the time frame, the more strength it's going to have in terms of moving price. What happens on a 1-minute chart is obviously not going to have any influence at all over what happens on a weekly or a monthly chart. Those are the big boys, right? So the 4-hour chart is more powerful, more strong than the 21-minute chart, which is why we use it to help us answer the first question of should we be long or short or do nothing, but then also to add it in as an extra addition to our odds when it then comes to the entry as well. So we've got a 9 EMA on the left-hand side. And again, you can use different EMAs as long as you're consistent with whatever one you use. The 9 EMA we're using here, meaning it's looking at the last 9 candles. This is a 4-hour chart on the left-hand side, so it's looking at the last 9 4-hour candles. Hopefully you're with me so far on that. And it gives us a number. The number that it's giving us is showing us what the sort of average movement is over those last 9 candles. So that number, that price is 1.1859. Now, why is that important? EMAs are often used, not always, but often used by not just retail traders, but by hedge fund managers and other fund managers as well, as entry points. Now, again, we don't just want to buy and sell at exactly whatever the moving average is, because that by itself isn't necessarily strong enough odds. We don't necessarily just want to buy and sell just where UFOs are, because maybe by themselves, not enough odds. Put those two together, now you have a situation where you have a lot more odds, because you've got people buying and selling based on orders being there waiting to be executed, as well as people buying and selling because the EMA value is there. So you're adding more orders to what you want to do. More people selling when you want to sell, brilliant. More people buying when you want to buy, brilliant, because that's going to push price. If we have more buyers and sellers, or more buy orders and sell orders, price goes up. If we have more sell orders than buy orders, price goes down. So the more people you can have buying after you buy or selling after you sell, the better for you. So again, the more odds that we have and we combine together using different technologies that different people use, the more likely it is to go in our favor. Again, not definite, but the more likely. So if our EMA value is 1.1859, then ideally what we want is a UFO on the right-hand side that envelops that number. So you'll notice on the right-hand side here with the UFOs, we have these numbers. Now, sometimes it can be confusing if you have UFOs that overlap, so you just need to make sure that it is the same UFO here. But those two sort of lighter red numbers will correspond to this UFO. These two numbers correspond to this UFO. These two numbers correspond to this UFO. And it's just showing you the range of price as to where those orders are. So over here, we have our UFO, red UFO, starting at 1.1861. Now, our EMA value is 1.1859, which is here, just beneath it. Now, remember I said that when we have our plans, we need to make sure that we execute those plans and there's never a situation where we're confused. At the moment, we do not have this EMA enveloped by our UFO. Now, potentially, if price were to move up, bear in mind the EMA will follow it, potentially the EMA goes up a couple of pips and ends up within our UFO. For now, it's not, so I'm not going to place that trade. Now, you could put alerts on to double check where the EMA is as it gets closer to price. We can maybe come back and look at it later on in the session. But for the time being, I'm going to be as strict as what the plan says, which is the UFO has to envelop the EMA. It's not, so we are not placing this trade. Is anybody with me? Everybody with me so far? Anybody got any questions in terms of that process we've just gone to start to finish to, in this example, decide not to place this trade? But what we've done here, is everybody on board? Is it making sense? Totally fine. If you have questions or you need me to go over it again, just let me know. Just go back to TradeStation. All good. Okay, good. Like I said, if you have questions after it, and for those that might have joined a little bit later, if you have questions that you think about after the session, if you just go to tradewithufos.com/Becky, get yourself a free membership, and then you can come down and ask a question here in the public forum so that other people can see that question, I can answer it, and then everybody sees the answer. So it helps everybody out if we use this rather than email. But of course, you can email me too if you want to do that. Okay. So we're going to come back to the scanner, and again, we're going to allow technology to analyze a lot of things for us and show us where these probabilities are likely to be. So we have this one here, a near sensible long. Now, you might be thinking, why did I skip over this one, the pound dollar? One of the reasons is I don't trade the pound. That's just a personal thing for me. But another reason is this. This grey box here in the scanner is telling us that we have an unconfirmed climate. And remember we said before that when that dot is thin on the Auto Climate app, it's an unconfirmed climate, no probabilities either way, so we don't do anything. That's what that grey box is telling us here in the scanner. So we don't even want to look at that, because all we're going to do is open it up and realise when it comes to question 1 that we're not even going any further. So I'm coming down here to the next one, which has a blue box, which is telling us that we have a confirmed upwards climate and we have price close to a good opportunity. So let's have a look at the Aussie dollar here. By the way, it'd be interesting to understand from you guys what markets you trade. If there are any particular markets that you want me to look at, we can see if they're on the scanner and if they work, or if there are certain markets that you avoid at the moment. Let me know. It'd be good to know where you guys are at with the markets you trade. So looking here on the left hand side, we have our 4-hour chart again, and we have a 21-minute chart on the right. We have an auto climate telling us that we have permission to look for longs because we have probability to the upside. That's what the thick blue dot tells us. We also want to understand how long can we expect it to keep going up for? Well, usually this market goes up for 8 candles. I'm just rounding that up. It goes down for 6 candles. Again, rounding that up. Considering we're in an upwards climate, it's really only important that we look at this. Market goes up for 8 candles. We're on candle number 4. So we're still got enough room to get into this and continue that movement to the upside. Okay, so the EMA is 0.7322. So do we have a UFO on the right-hand side that coincides? Unfortunately not. The top UFO that we have here starts at 0.7309, meaning that obviously the EMA is above it. It's here-ish. And yes, as price comes down, the EMA will move down, but not necessarily by that amount to be able to align with it when it meets it. So we're going to leave it there. Cable there from Dow Jones from Tapita, cable there from Hisham. Yeah, so I'm. You might notice from my accent that I live in the UK. So I don't, or from the UK, live here too. So I don't trade the pound only because I know that I may have a level of bias about it. When the whole Brexit thing was going on, which seems to be never ending, for me it was like, I know that even if I'm not going to think about it logically that way, I'm not going to logically think I'm going to buy or sell based on my opinion on Brexit or based on my opinion on what happens in the country. But I know that that could be in the back of my head. So I just don't trade it at all. I don't want there to be any bias when it comes to my trading. I want it to be as objective and methodological as possible. So I avoid the pound. That's quite an extreme stance. Most people don't necessarily think of it that way. Some people prefer it. If they live in the UK, they might say, brilliant, I want to trade the pound because I understand it a bit better and it's something you already know and it's more comfortable. That's fine too. No stance is right or wrong. It's just my thing there. Just from Hisham, it's your daily bread. Brilliant. If it works for you, great. And it's not to say anything bad about the pound other than that I don't want to have the bias with it. So for the same or a similar reason, I didn't trade the yen for many years because the decimal place was in a different point and it confused me, which is stupid really, but I learned my lesson. I trade it now. But just random reasons why you wouldn't trade things and why you would have certain watch lists, and it's fine. What people I think a lot, and I understand why they do it, is that there must be a way of doing it. There must be one reason and one way and one methodology and one strategy and one platform that is perfect and that is the golden nugget. When the reality is there are so many different ways to do it, and that's great because it means someone like me that doesn't want to trade the pound doesn't have to. Someone like Hisham who's trading the pound and it's daily bread can keep doing that. Brilliant. And both of us can do well without there needing to be one of us needing to change what we do, which is amazing, I think, about the markets and the flexibility actually that's there. So moving on to the next example. So we have New Zealand US dollar here, a near sensible long. Now, bear in mind, we saw that we have high impact news coming out in a couple of hours for the New Zealand dollar, or for the New Zealand dollar itself, not the New Zealand dollar against the dollar, but the New Zealand dollar itself. So you might, if you're very conservative, choose to keep away from that or reduce your risk. Bear in mind, we've still got a couple of hours before it comes out. So for me, I'm going to go and look at the New Zealand dollar there. So let's open up this and look at New Zealand dollar. Again, we want to make sure we're looking at the New Zealand dollar on both of our charts. There we go. Just looking at it here, it looks like once again we won't have an opportunity, but I'll just explain quickly why. So same thing again, confirmed upwards climate, probability to the upside. Normally the market goes up for 7 candles. I'm rounding that up. We're on candle number 4, so probability that it continues. So it could be that we go long, but we have our EMA here of 0.6959. We want that to be enveloped by a UFO on the right hand side, but 0.6959 is going to be around about here. And again, no UFOs round about here. The closest by one is down here. So again, no trade on that, no worries. Left chart is 21 minutes. Left chart is 4 hours. Just seen that question there from Martin. So the left chart is a 4-hour chart. The right chart is a 21-minute chart. The left chart, or the bigger chart, we call it a common time frame, is going to be used to help us identify climate and also used for the EMA. to help us decide whether or not we're going to go long or short when it comes to climate. On the right, we have a 21-minute chart. That's our entry time frame, where we're looking at UFOs that coincide with this EMA to put all those things together. So hopefully that makes sense. Let me know if it doesn't. I'll come back to that. So whilst we wait for that, let's look at another example. So we've got the dollar Swiss down here. Again, let's just pause that. Dollar Swiss is a US dollar Swiss and US dollar Swiss. And let's just see here if we have, or just missing it again. Not a lucky day today in terms of lots of opportunities, but we'll look at some cross pairs in a second, have a look at these. So in theory, a good opportunity because we have a confirmed upwards climate, probability to the long side. Usually market goes up for 6 candles and we're on candle number 1. So again, decent chance of movement to the upside. However, the EMA is 0.9116, so 0.9116, which is about here, which means, again, we don't have it enveloped by our UFO. Now, again, as price moves down, potentially the EMA moves with it and gets us into this trade, but for the time being, it doesn't line up, so we're not going to look at it. What I'll do now is have a look here at the Euro US dollar, which is the one that we looked at the start, and just see if those EMAs have changed and if we have a trade lined up. So this was a short opportunity that we needed, and it was the Euro US dollar, wasn't it? Let me just double check. Oh, it looks as if it's come down off this scanner now anyway, which makes sense because you'll notice here the EMA is 1.1861 and current price is 1.1863, so it's actually above the EMA. So if it's above the EMA, we no longer really want to be going short. I wouldn't be surprised to see the next candle change to an unconfirmed climate there if that continues to move upwards. So we'll go back to the scanner, have a look at the next opportunity. Nothing really on here. This is looking at the majors on the left-hand side. Now, of course, we have opportunities for the majors that we could look at here on daily climates. I'm going to stick to the timeframes that we're using now, not to complicate things too much and change things about too much, but you'll see that we have many opportunities down here that we can look at. So hopefully we'll get to the point we can put a trade on. So Euro, New Zealand dollar. Again, like I said, for those that are a bit more conservative, you might want to avoid the New Zealand dollar. We saw there was high impact news coming out in a couple of hours from now. For me, I'm going to have a look at it because there's still a chance to get in and out before that happens. So Euro, New Zealand dollar. And Euro, New Zealand dollar. Great. Okay, looks like we once again don't have an opportunity here, unfortunately. I'll just skim through this as we've gone through the climate a few times. We have permission to go short based on the time that it goes down and the dot there. We have an EMA value of 1.7045, which is about here, literally just above current price. Just above current price, there's nothing really there. It's not until we get up here that we would have a decent shorting opportunity. By the time that happens, we probably would have crossed over that EMA anyway, and therefore wouldn't be looking at doing that. So let's move on. Pound Aussie, let's have a look at that. Like I said, I personally avoid the pound, but for your purposes, let's have a look. Now, one of the good things about this, I know sometimes if we look through these opportunities and we are strict on our plan, we are strict on what we're looking at and where we want it to be. And it can seem a little bit annoying because we go through and we don't find any opportunities that line up and therefore don't necessarily place trades every day. But that's a good thing. I would rather go through opportunities, realize that there's nothing with high probability and have the rest of the day off than put trades on for the sake of putting trades on that are likely to lose. And then, yeah, okay, I filled my time. I might feel like my time has been used better if I put a trade on. But if it's going to lose me money, that's a greater waste of my time than to not put the trade on at all. So once again here, confirmation that we can go short. However, the EMA is at 1.8203, which is here. Again, no UFOs around there. Of course, if price comes up to this UFO, The EMA might move a little bit. It might mean that we get into it, but again, for the time being, nothing lining up. So we'll just look at the next one. And again, this is the beauty of these scanners, because we could have gone through every single one of these and had to analyze every single one of them before we realize that they aren't good opportunities. I know we've had to do that a few times, but at least we are saving a little bit of time by using the scanner to tell us what to look at. So let's look at the pound New Zealand there. And again, I'm just changing it on both of those charts. Nope, no opportunity here. Again, I'll just quickly show you why. EMA is at 1.9150, and that is around about here-ish, meaning no UFOs around there. No problem. Let's look at the next one. We have Australian Aussie CAD there to look at. So whilst I'm just checking through these guys, whilst we're looking for some opportunities, just let me know if you have any questions about the climate or about the UFOs, about how things work, about what I'm doing, if I'm going a bit too fast, if I'm going a bit too slow, and you've already, I don't know, you've already looked through some opportunities and there's ones to put on. Let me know about it. Let me know where you're at so I can answer questions as we go through this. Okay, so again, the EMA is here, 0.9562, which is round about here. No UFOs around there. So look to the next one. Again, the beauty with using technology is it's really quick to realize that you shouldn't be trading, rather than spending ages analyzing everything, going through every chart before you realize you shouldn't be trading. Okay. 673. Okay, so with this one, I'm going to use a little bit of anticipation. So we have a thick blue dot, a confirmed upwards climate, probability to the upside. Usually the market would go up for 7 candles. I'm just rounding that up. And we're on candle number 4, meaning we have probabilities of a continuous move there to the upside. Now the EMA itself at the moment is at 0.6673, which is round about here. However, actually, that's probably too far. I was going to say as price comes down, the EMA would move down, but I think probably ratio-wise, that's going to end up meaning that we cross the EMA as opposed to get in it. Again, with these, as the price moves, obviously the EMA moves with it. So sometimes there's a bit of anticipation that we need to think about in terms of by the time price would get to this point, to this UFO, where's the EMA likely to be? That comes with time, with you just kind of getting to know how the markets move. For this particular one, I think unless we were to move down very slowly, if it was to move quickly down, we would end up crossing the EMA and not lining up there anyway. Just going to look over here to any questions. My EMA does not have these ratios. So when you say ratios there, Tafita, do you mean doesn't have the prices? So if you use the 9 EMA, you're not having those prices come up, or what do you mean in terms of ratios there? Let me know, and I'll just look for the next opportunity here whilst you answer that question. So let's have a look down here. We have New Zealand Swiss near sensible long. So New Zealand Swiss, there we are. Again, I'll just quickly scan this here. The EMA is 0.6342, which is about here. And price is at the moment 0.6346. For it to come down here and enter this UFO that starts at 6328, it would cross that EMA line. Unless it came down slowly and the EMA would kind of come with it. So again, let's just move on, have a look at the next one. And let me know there, Tafita, what you mean by the ratios with the EMA. Might be something I can help you out with. What do we have here? So another sensible. That's the Singapore dollar. I'm going to leave that one. I think it's a bit too exotic for me. What else do we have here? We have how we've looked at all of these. Okay, in which case, let's move on to the new climates here, or to a different set of climate, which is our daily climate. Now, I'm going to change a couple of of things here. So I'm going to have 1 day on the left-hand side, and I'm going to have a 55-minute on the right-hand side. Again, I know that might seem a little bit weird or a little bit strange there as to why we use a 55-minute and not necessarily a 60-minute or something a little bit more commonly used. Actually, the answer is we don't want it to necessarily be something that is commonly used. Not to say there's anything wrong with using a 60-minute, but the 55 is the one that we use to literally give us an edge in the markets by using something slightly different in our entry. We literally call it the edge time frame. So we have daily on the left-hand side. Oh, we're looking at the wrong chart here. I'm just going to come over here and look at these two. So we've got dollar Swiss and dollar yen. Let's have a look at the dollar yen because we haven't looked at that currency yet. Okay, and we have a trade with this one. Brilliant. I'm glad I picked that. So we have on the left-hand side our daily chart. We have our auto climate showing us that we have a thick blue dot, probability to the upside, meaning that we have permission to look for longs. We also see that normally the market would go up for 6 candles and we're on candle number 1. So we have probability that it continues to the upside. Again, it's not definite, but it's probable. So again, we're putting odds on in our corner there. We have an EMA value of 104.37, which is just here. Meaning, even if price comes down from here and enters us in, maybe the EMA moves to here or maybe slightly lower, but it's definitely enveloped there by our UFO. Meaning, this is our first trade of the day here, guys. This UFO here with those numbers there. Now, there's a slight change that we might do in terms of adding and subtracting for our entry and stop. So let's go through that. Just looking at there on the chat from Tafita, using MetaTrader 5. So if you're using, it depends on obviously the broker you're using as to the data. It might be slightly different in terms of prices. Obviously with Forex being not being a centralized exchange. I'm using the Oanda data here. But you could use data from, if you're using data from FXCM or I don't know, whatever other broker that you use, that might be why the 9 EMA values aren't lining up exactly, because potentially the price isn't lining up exactly. The spread again might be different, changing those things. But if you're using the exponential moving average, the 9 exponential moving average, it should be roughly that the prices that I'm having on my chart are going to be roughly what yours are. So let me know if they're vastly different. Okay, so I'm just going to walk you through what would be my the way I do things on here. It's not to say you have to do it, but I normally come across and I use Fibonacci retracement lines to just highlight this UFO. Now you'll notice these have not been drawn the way normal Fibonacci lines would be drawn. I've customized them. So I drew the fib lines and I went to style and I customized them to simply have 0 and 1. The reason I'm doing that is because I'm not using them as Fibonacci lines. I'm using them as drawing tools to highlight for me where these, where my entry and stop are going to be. So I have my entry reference value there is 104.394. Now I want to round this up a bit. So I'm just going to double click on that, and under the coordinates tab, I can type over where I want it to be. So 104.394 is the reference. Now round that up to the closest pip, takes us to 104.40. I'm just going to add a couple of pips as well. Again, just give me a little bit of wiggle room. So 104.42 is going to be my entry. My stop loss reference is 104.14. I'm just going to round that down. So it's 104.146, round it down to 104.14, and I'm going to take away 5 pips. So that gives me 104.09. Brilliant. Now, where am I going to take my target? Now, we have 2 targets. One of them is going to be a safety target, which is 1-to-1, and one of them is going to be a further target, which is based on our other time frame. I'm conscious of time and I'm running over a little bit here, guys. So I am just going to simply put in a 1-to-1 target just to show you how we would put this target in. And then when it comes to final target, what we would usually do is we would add our, where are we? We would add our UFOs. I think I added it to the wrong, I added it to the wrong thing. Anyway, we would use UFOs from the left-hand side, the opposing UFO, to give us a target. In this case, I'm just going to put in a one-to-one trade here just to show you the process, and then we'll have to wrap up for the day. If you have any other questions, by the way, now's the time to ask so that I can answer them before we finish. So I'm just going to click on order panel, and I'm going to click buy because we're going long. I'm just going to type in what my entry and stop values are, which I know from here. The UFOs gave me my reference value, and I rounded up and rounded down to give me a little bit of wiggle room. So 104.42 is my entry. My stop loss is 104.09. That tells me if I was to trade 1,000 units, so 1,000 micro lots, then I am risking $3.16. Now, let's say I wanted to risk 20 bucks. Then it's telling me how many units I have to trade. Let's say I wanted to risk 100 bucks. It's telling me how many units I have to trade. Now, this is a paper trading account. I'm going to keep it at $100 just to be really like round number, but of course it's entirely up to you what you risk per trade. Now, in terms of taking my profit, if I want it to be one-to-one away, then I need to understand what the difference is between my entry and my stop, which it tells me here is 33 pips, and therefore my profit needs to be 33 pips away. So I can just type in 33 pips, and it tells it the price that it needs to be. Now, we have two targets. One is a safety target that's one-to-one away, and one is a further target based on UFOs on the left-hand side chart. For the purposes of this, just to get done roughly on time, I'm just going to show you how we would do this here. So I've got my entry and stop values. That comes from the UFO. My safety target is always one-to-one away. So if I'm risking 33 pips, then my target is 33 pips away. I'm equivalent risking one to make one. And then all I need to do is click buy. That will then go through. This is a paper trading account, so this will go through on your paper trading account. But you can link things to Oanda, FXEM, I don't know, whatever other brokers that you have, that if you want to go and place them on plus 500 or IG, whatever it is, you can go and place your trades through your brokers, and you can link them, a lot of them, to TradingView to put this on. And then you'll see we've got our limits there now. So it's showing us where we're buying, where our stop loss is, and where our profit is. This whole process has been using technology that has helped us to eliminate not great opportunities, find higher probability opportunities, and enables us to do the maths easily by using TradingView, enables us to understand where we have the greatest statistical advantage so that we can be objective and methodical about the trades that we place. If you have any questions, you can ask me now. I might have time to answer them now. Or afterwards, again, if you go to tradewithufos.com/Becky, maybe you go and try something and you think, oh, that doesn't make sense, or I can't remember what she said, or what was that again? Just go to tradewithufos.com/Becky, sign yourself up with a free membership, and then you can come down and ask a question in a public forum where I can answer it. By the way, as well, for those that are new to it, the Auto Climate app is also free. So if you set up your free membership, you can then go through from there and get your free Auto Climate app, which helps us answer question number one. The Auto UFOs, depending on which platforms you use, vary, starts at $34 for TradingView. So again, you can look at that as well if you want to. Otherwise, you've got the free Auto Climate. Okay. So it doesn't look like I have any questions. I've seen there from Tafita that you're using MetaTrader 5. Again, the numbers shouldn't be too different. So maybe let me know either on the tradewithufos.com/Becky, or you can email me, becky@tradictive.com. If they are vastly different, then perhaps it's using a different EMA, or it might be using a different, might have looked at a different market or different timeframes or something like that. But let me know if it is vastly different, and I can help you out with that. Okay, I hope you guys enjoyed our session. I know I've run over a little bit here, but we did manage to place one trade. We have our US dollar long, US dollar Japanese yen long 55-minute chart there for our entry. So hopefully that was helpful. I will see you guys next time. I believe I'll be here in a couple of Wednesdays' time. Otherwise, we run sessions quite often. The Trade with UFOs team will run sessions quite often within FX Street and on YouTube as well. So you can find us on there. And yeah, I'll see you guys next time. Have fun. Have a good day.